Well, hello, everybody. Welcome to Tuesday. The S&P 500 was up a little bit more than 1.1% today, which is a really good day altogether. And lots of things were green today. There was some pretty good breadth. The value pieces that we have today did well, so very happy with that. But there was also some other pieces that were really interesting today. Let me share this with you. So this is a chart we've seen a few times now. This is from the Vanguard's version of the S&P 500. So the last year, and you can see we dropped and it came back up and what have you. But if I zoom in, we can kind of see what happened today. So today, if you look here, we broke into a new category. We broke out of this range that we were in, and we hit an all-time high today. And something I was talking about last week. I think once we kind of break out and start running here, this could run because, again, low interest rates and all these other things that are happening. And here's one of the things I've been thinking about, and let me back out again. Whoops, wrong way. Sorry. We look at the full year here. We started, this is the 23rd. We started on the 22nd with this video series. And purposely, I was focusing on the positive, mainly because I have clients that, were dealing with the financial fear of the market coming down. And then, of course, the physical fear of catching the virus. And one of the things that happened here is that those people that did focus on the positive, they won. The correct path was the positive path. It's a little bit what I'm trying to talk about for next year. My gut feel is that the correct path for next year will also be the positive path. And it could be a really positive path, depending on what happens. Now, one of the things you have to be careful of as an investor is not to go too hard on one side or the other. You don't want to just focus on the negative. I read about some big money managers that had really poor rates of return this year. I think that's because they had too much focus on the negative and not enough balance. You don't want to only focus on a positive. And I know that seems like that's what I'm always focusing on, but I'm just trying to kind of offset all this negative stuff that's out there. Personally, I try to stay very balanced. I try to have portfolios that'll deal with the downside, portfolios that deal with the upside. If things explode on the upside next year, I want to have some plans for that. If things fall apart, I want to have plans for that. But my point is to become a better investor, which is part of what we deal with here in this series. You need to focus on gathering positive data to go with your negative data that's out there. It's not that easy. It's a lot harder to find the positive stuff that you need to know in order to kind of create that balance that makes you a better investor. And so, it's kind of the basics of what we're established here as far as, this whole series goes. But I do think, that aspect is missing oftentimes in people's outlooks when they're looking at their investing, and they'll tend to be, underweights, equities or stocks, or, out of the market and those types of things. So try to keep a balance. Even on the 22nd of March, at that very bottom there, I was able to extract positive data and information that was there. It was really, really buried at that time. There's more positive information now, that the market is doing quite well. But that's a big piece of becoming a good investor, is that kind of positive part. So I'm going to work on, booking a trip. I talked about that yesterday. I just had a great conversation with a client and asked me where I was going after my comments yesterday. And, I love Hawaii, and I think I'm going to try to book a trip in Hawaii. And her comments were really useful to me because it's not just the money, they could get a discount or what have you. It's just something to look forward to, which I'm really looking, forward to at this point in time. So I hope everybody has a great evening, and let's talk tomorrow and see where this market goes. Thank you.